Just like we did in last night's GME thread of analysis, let's go through the available signals for AMC. Everything from candle analysis to psychology, from physics to statistics and options flow. Let's look at the good, the ugly, and everything in between to gain an edge over the following sessions. Welcome back to the channel on this sunny Saturday. This is ARCa, and let's dive into the popcorn. Let's kill 'em, team. What is up, you guys, and welcome back to the channel. Please do me a favor and hit that like button, subscribe to the channel, do everything necessary to get this thing to live long, thrive, and survive. Let's go ahead and dive in to AMC. So you know what? I was actually looking at AMC and trying to find some bad news on this, just like I did on GME, where we actually noticed this massive shooting star on the weekly time frame, right? But on AMC, I gotta say, I actually didn't find anything of immediate importance like that, right? In fact, I actually have a bunch of signals here that are indicating a potential reversal in the incoming short term. So let's go ahead and dive into that right away. This is, and you know what? Let's really dive into it because there's a few things to talk about here. So we're going to try to make this video as fast as humanly possible, right? So this is a descending channel here, right? And usually descending channels respect something called the golden rule of three, and that is actually ARCa's golden rule of three, right? So I've actually studied a lot of descending formations, and usually you'll get that test 1, 2, test number 3, followed by a capitulation event, a pretty strong one, right? Followed by a true breakout on test number 4 and or 5. Okay, so, or 5. So in this case here, we already got number 4. We already came right back down, and now we're testing that potential number 5 breakout. So this could be introducing a breakout very soon, as it is getting ripe, right? So let's go ahead and take a look at the targets available for this formation, as though actually, you know what? The way that you take the target is just like this. Please go ahead and take a trend line from that top regression all the way to the bottom side and apply it to the implied area, right? To the idea where you think we may be expressing a potential breakout. Let's just say that we would, just like a GME, right? Let's just say that we were to start breaking out here at Euro Open come Monday. The target that you're looking at here from this formation would be around $5.11, right? And that would make sense. Remember these targets here, right? Then that would make sense because of the following targets that we're going to observe in the options flow as well. So remember these targets as we're talking about them, right? Because they are, in a sense, kind of rhyming here, right? So let's go ahead and just mark this off just like this and now move on to the next chart. So take a look at this. Guys, this is now the 5-day chart, right? So it takes roughly 6 to 7 days to complete every single 5-day candle on this, right? So just know that every single interval that we're looking at are different. These are hourly candles. It takes 1 hour to complete each one. The bigger the time frame, right? The bigger the time frame, the better the strike rate is for the formation. So let's go ahead and take it into the macro. So these are the 5-day time frame formations, and what you're observing here is actually a tweezer bottom formation, right, where you have even bottoms of these shadows or the wicks from the candles that usually presents a very bullish outlook, and it also presents a shift in sentiment. It happens during a downtrend. So here's obviously your downtrend and obviously your other downtrend here, just to back it up for the second time. So both of these candles here are indicating a potential reversal, and this is the brand new 5-day candle printed, right? We have 4 days and 22 hours to print this one right here. All right, guys, so let's go ahead and now take a look at the next chart. There is, just to kind of clarify here, for this formation, there is not a price, there's not an implied price or a price objective to observe like the channel has, right? It's a very limited amount of formation theory or formations that do allow a price objective, right? So let's go ahead and take a look at the next pattern here, and I did color it a little bit different over here, team, just so that I can show this vector. So go ahead and notice this. This is a hammer candle printed on this 5-day period, which is indicating the potential of a reversal or sentiment change in the coming days, right, before we actually express that massive upside, right? So what I need you guys to do is please notice that we absolutely have this massive signal here, right? The tweezer bottoms. We have this descending channel for a potential reversal, and we're looking at the tweezer bottoms as well, right? So already looking at several signals towards the upside. Now, how is it, just like in GME, right? How is it that ARCa knows all these formations? Well, team, I definitely know these formations because I am an instructor and I definitely teach this, right? So make sure to get in touch with me at ArcMastersCourse at gmail.com because I have now consolidated my 18 to 19 week mentorship program down to a 4 to 5 week crash course mentorship for my beginners. Okay, so please make sure to give me a holler at the Gmail there. Okay, make sure to call me and make sure to send me a message to ArcMastersCourse at gmail.com. All right. I love you guys. Thank you so much for watching. Make sure to hit that like button, subscribe to the channel, and let's go ahead and move on now to the next formation, okay? We're going to take a look at now this other formation, and this is the last one from the 5-day period. What you're looking at here is an inverted hammer, and that usually presents a continuation towards the upside or a complete shift in sentiment, right? So yes, this is very much presenting to us a huge trifecta, right? So we're looking at a tweezer bottom. We're looking at the inverted hammer and also a green outside body bar. So this would be a bullish tri-formation breakout. It's actually something that I've actually coined myself, that term for bullish or bearish biformations or single formation or tri-formations, quad formations. Those are all coined by me. All right, so please go ahead and notice that we do have several signals here indicating a potential reversal for price action overall. All right, team. So let's go ahead and take a look at this right here. But actually, before we dive into this chart, let's take a look at the options flow, right? So I'm going to go ahead and shift it to this screen right over here. And I want you to go ahead and understand a few things before we start on here, right? This is AMC. So what we're looking at here is options flow based on open interest. Okay, so this is your expiry date, right? This is 24th of May. These are the expiries. All right, right under this, it's your call, and this is your put. And these are your strikes, okay? So we're going to notice here we have the heat map on so that we can determine which ones have the higher open interest. All right, so go ahead and take a look at here because all of the brighter green areas are the ones that are presented right now as calls. Look at that. All of those zones are actually all within calls. So if we take a look at this on the 24th of May, please take a look at this, 17,600 at the $5 strikes. Remember, we closed post-market at $4.34. 550 showing 10,500 open interest. And look at this, $6 with almost 20,000. 650 with almost 13,100 right here. Look at this, the $7 strikes with 4,000 open interest. The $10 strikes with 9,100 open interest. We have the 1250s at 9,679. And as we push down here, take a look at this massive number we have for the 24th expiry, $22 strikes, almost 11,000 in open interest. Now moving on to May 31st, 7,400. The calls, guys, just for those of you who don't understand, the calls are to bet the upside. The puts are to bet the downside. So please notice here that there are 5 puts in comparison to the $11,022 call options, right? Insane numbers here on June 21st expiries. Take a look at this, 10,200 open interest at the $20 strike, 6,200 at the $17 strike. Look at this, almost 3,000 at the $15 strike, 2,000 at 12, 5,700 at 10. Guys, we have massive numbers coming in for this, and I do expect there to be a complete shift over here because there could, I mean, if we're going to follow the options flow is kind of stating here that there is a lot of buy pressure or a lot of buy side interest coming into the asset. So why don't we go ahead and shift over to the other side and just take a look at the present situation here using volatility versus momentum. So we're going to enter a little bit of physics here and see what's up, right? Guys, please remember, we are trading this live in the ARCa Bulls trading team. So if you are if you actually want to join the ARCa Bulls trading team, remember it's one thing. Actually, I said this in GME, right? A lot of my students love when I say this. So it is one thing to call the play, right? And it is quite another to execute that play. So if you want to know how to execute these plays, please make sure join us in the ARCa Bulls trading in the trading floor in the ARCa Bulls trading room, right? That's going to be on Discord, and I'll go ahead and actually present this to you. I'm going to put a sign right up here so that you can join the ARCa Bulls trading team, right? That's going to be the link for you to come by. So now the last part of the analysis here is going to be what I said, right? We're going to check the immediate short term. We're going to check the middle, the midterm and the long term here. But more importantly, the immediate short term. We want to know what the potentials could be for this coming Monday. So let's go ahead and see this right now, team. Check this out. We have massive declining in volume right now with declining price action. That usually means that the short thesis is slowly declining, right? That strength is coming down right now, and there could be a shift towards the upside now that the volume has reached a minimum here for the bearish side, right? So let's go ahead and take a look at this too, right? The stochastic momentum is coming down to a very point. It's already oversold, so there could be a shift here very soon. It does not mean that we're going to shift immediately here. It just means that there could still be some downside, but we are looking at a potential floor very, very soon. Okay, guys? So now that you remember seeing those targets from the options flow, remember that we showed you here just a little bit ago that we were looking at a massive 17,700 at that $5 strike and the 19,532. This is almost 20,000 in open interest at the $6 target. If we come back here and look at the first thread of analysis, $5.11 is already in line due to the breakout from this formation here. So we have confluence between psychology, formation thesis, and also the options flow. So this is looking already pretty damn good in my opinion. Okay, team, please remember that price action does not have to just go up. Price action has ebb and flow, and it will go down too. Okay, so if this doesn't realize in the first day, do not let yourself down, because we in the ARCa Bulls trading team are looking at several other tickers so that we can be able to gain more and more liquidity into our portfolios, more capital, so that we can trade these big pops from AMC and GME when they are available. Okay, so we're preparing that as we go. We just made hundreds and hundreds of thousands of dollars. I know that sounds ridiculous, but I'm really super seriously not kidding about that. As we literally made hundreds upon hundreds of thousands of dollars on FFIE in the last 2 weeks. So please go ahead and join the ARCa Bulls trading team. Remember the link that I just showed you just a little bit ago. You can also find it in the description below. And if you want to trade like the institutions, if you want to trade like they do, please make sure to reach out to me again at that ArcMastersCourse at gmail.com. I'll pass you the disclaimer, the syllabus, and everything pertinent and to that lecture. We're coming up on it. I'm going to be closing enrollment here soon, and I'm already getting filled up with a bunch of other interested people from GME as well. So make sure to get your butts in there. I want to see you in the floor, and I want to see you in class. Let's go ahead and make sure to trade the financial markets the right way. Now, guys, let's go ahead and take a look at the immediate short hourly time frame and see what's up here, right? Okay. Good deal here. We're actually noticing that we're also oversold. I want to get a little more granular though. Let's go to the 5-minute time frame. All right, the 5-minute time frame, huge contraction, right? Usually when we have all this contraction here, that means that all the transactions have slowed down to a bare minimum, right? This is my algorithm here. This is my volatility heat map, measuring volatility in linear here, and this is giving us the disbursement of returns. So in other words, we can look at this as the transaction rate or frequency, right? So as volatility increases, that does not mean that price increases. It just means that there's more interested buyers and sellers coming in at a faster rate. So this is volatility expansion towards the upside and volatility contraction towards the downside, okay? What we use to determine the volatility direction, the bias, is stochastic momentum. That gives us the upside bias or downside bias. So for now, it looks like we're a little bit even here on the 5-minute time frame. Let's look at the 10-minute time frame, right? 10-minute time frame is already getting a shift towards the upside here, so we may actually start getting some expansion here too. All right, let's look at the 15-minute time frame. All right, good deal here. It looks like we may still get a little bit of even trading, maybe a little bit more of consolidation, just like we kind of did over here, right? And then we could be shifting towards a new decision based on all of those formations that we just took a look at, right? So many signals here that are potentially indicating for a shift in price action, specifically towards the upside. Remember that yes, we are looking at an upside price action here, but it does not mean that price action will continue to the upside immediately. I need you to be patient with this. I need you to make sure to look at every signal here, and I need you to make sure to study as hard as you can so that you can become a disciplined and consistently profitable trader, just like the people inside of the ARCa Bulls trading team are, okay, team? So now you know the upsides, you know the downsides, you know the potentials right now, so please go ahead and get in touch with me if you have any questions or concerns. But so far, it looks like the $5 target is in line with the top side of about $5.21. Of course, if we start failing this bottom side of $4.19, do not let price action fail $4.19, or else we're going to be looking at some further downside targets, specifically to the areas of about $3.81 to about $3.76. Okay, $3.81 to $3.76 is a no-go zone. We do not want to go there, but if we do go there, it may present a potential opportunity for longs to get pretty aggressive there, right? So yeah, let's go ahead and make it I'm just going to go ahead and adjust the target here. Actually, it would be right up there, right? So yeah, do not let price action here fail the 418, 419 area, and it, 418 to 376. We cannot fail this area here, and you'll get that drop, right? You'll get an immediate drop from 418 all the way to 370s, 380s if that happens. Okay, team. So please remember, join the ARCa Bulls trading team. Get in touch with me for the ArcMastersCourse and trade the right way. All right, team. I think this is a pretty good place to leave off the video, and I shall chat with you soon. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, never, ever, never, never. I need you to do your own due diligence, and everything will be cool. But with that said, team, I wish you well a very, very good rest of your weekend, and I will catch you at the bell on Monday. Adios, team.